Hey everybody, and welcome back to the Sunday Sessions video. Hope we're all doing well. To anybody that's new to the channel and you don't know what this video is by now, it's a weekly video that we bring out just before market open on a Sunday evening. Me and Luke, we run through the Forex markets. We take you through some currency pairs, ones which we believe are providing us with the best investment opportunities for that coming trading week. We'll run through some analysis on that market, whilst also providing you with our predictions for what we believe price will do moving forward in that coming trading week. So I hope everybody enjoys today's session. Please leave us some feedback in the comments, whether you agree or disagree with our analysis. But without further ado, I'll jump straight into the markets. I'll run through my pairs, and then I'll pass you over to Luke. Okay, so I'm going to be starting here on the euro to US dollar market. So as of last week, we actually continued our bearish structure for a while, but then when Friday came, we ended up having a massive depreciation in the dollar and a big appreciation in the euro. So we did have a bit of a bull run. We'll dive into that shortly, but for now, I'm just going to run you through the structure from what we've seen for the past month or so. So as anybody who's been watching these videos, anybody who's been doing analysis on this pair yourself, you'll know we have been in a downtrend producing bearish structure, evident by these impulses down, corrections back up, impulse back down. So at the moment, this in my eyes is our higher time frame impulse down. So from 1.161 basically all the way down to price as of current, that is an impulsive wave in my eyes. And quite simply, price now, if it has taken that reversal and we are wanting to put in that correctional wave, we can look to find supply anywhere within this wave down. So I've highlighted this impulsive wave with that blue box. Anybody that's seen that 3-box strategy, you'll know exactly why. To anybody who has not, check up in this right hand corner, click on that link and go and watch that. That is a brilliant informative video where I run through a great little strategy for analyzing the markets using that smart money concepts. So regardless, moving on with this, as I said, I'm expecting price now to trade back up, find supply anywhere within this region, and then take that reversal. So for me, the two most likely areas is going to be the first supply zone produced and then the most recent one. So my reasoning behind this is because at the moment, I'm seeing this structure. So to me, this is the most recent protected high. So if we do break the most recent protected high, that is confirmation that we are going to want to go bullish for a while. So it'd be unlikely for it to break the protected high and then reverse in this area, because after breaking that protected high, it's fulfilling a different bias. So in my eyes, personally, if it does break this region, we'll be looking for that first supply zone introduced. And if not, if we do find supply here, we'll be looking for a sell there. So just to conclude, the two areas I'll be looking to sell from is around that 1.134 and 1.155. So I'm now going to dive deeper into those lower time frames and show you exactly what I've seen as of recent. This is a longer term bias, but now I'll run down into that shorter term bias. Okay, so moving lower, this is a bit of analysis I did at the end of last week. As we can see here from this rally, price has now broken through all structural highs within this area. So to me, that is some great confirmation of shorter term bullishness. So we could have looked to be a buyer in this market after this break of structure to try and trade price up into this zone. So this is that 8-hour zone we identified before, the first zone that I believe price may react to. So all I'll be doing now is waiting for price to trade up into that region, looking for entry confirmation using Wyckoff schematics. If I find that, I'll be looking to go short. If not, we may see price actually break through this region. If that does happen, that confirms to me that we're going to be bullish moving forward for the next week or so. So if we just watch this area, so once price surpasses that sort of 1.134 area, we'll be looking in this region for a reversal. I have a 1-hour refined zone, which is exactly at 1.135. So set your alerts here. See how price delivers to us when it reaches these levels. If we find that confirmation of reversal, great selling indicator. If we manage to actually push through and break this higher time frame protected high, as I said, we'll be looking then to go bullish moving forward for the next week or two. Okay, so I've moved over now onto the Aussie dollar to the US dollar. So the reason I thought this was going to be quite a valid market to look at is because of this recent break of structure here. This is quite valid to me because I was actually looking for this low to be held. Even though we managed to get some intermediary sells in this region, if you remember correctly, I was hoping that as we traded down into this area, into this high volume push down, I thought we were going to find demand here and then make that next leg higher in the scheme of a potential bullish run from now on. But of course, we've come through, we've had the break of structure here, so that BOS. Now what this does is it invalidates what we thought could have been bullish structure and now validates what we believe is going to be bearish structure moving forward. So if we dive into this now, we can begin to see how we can look to be a seller in this market moving forward. Okay, so this market has been moving down with heavy supply. We've not had any real correctional waves in the scheme of things that have been leaving obvious supply zones. I am seeing a nice hidden supply zone in here. This is something we could only see when we drop down to those lower time frames. So this is around that region of 0.716 all the way up to 0.717. So keep your eyes on this. I believe shorter term, I'd like to see price trade back up to find supply in this area just to mitigate this region because we do have some imbalance below. So that is another confirmation tool we can use in confluence with the supply zone. So if we drop to the 15-minute quickly, you'll see that within here we do have some market inefficiency. So from the top wick of the last bearish candle to the bottom wick of the first. So right there we have some market inefficiency. It'd be nice if we could have price come back up, fill this inefficiency, and then tap into and find supply just in this region here. So just this last buy before that heavy sell-off. So we just mark this up as a market inefficiency. We now have that on the chart, and we now know that this area holds quite a lot of relevance to us. When we can confluence a supply or demand zone with a market inefficiency, so for a supply zone just below, for a demand zone just above. So in this case, we've managed to identify a small inefficiency just below. That gives us extra reasoning for price to want to come and break these structural highs to fulfill the supply zone. So it's definitely something to be watching out for. And just to add to that, the fact now that we've had a lot of rejection from this level could be a brilliant indication that demand has been introduced into the market. And in order for supply to remain dominant in the future, we are going to have that correctional wave, run some of the liquidity highs, regain supply, and then make that push down and push through this level. So whenever we see this, whenever we see price begin to consolidate, it's typically going to either be the start of that correctional wave or a manipulation through the use of a reaccumulation or redistribution. So if we do have a redistribution here, I'd be expecting that manipulation, that up thrust, to potentially come up, breaking this liquidity highs, and then tapping into the supply zone before moving lower. If we do actually decide that we want a correctional wave in the wider scheme of things, this way we'd now bump back up to the higher time frames. And just a quick final update on the US oil market. This is another pair that I've had on this Sunday session video quite a few times now. So from the start, I was looking at this distribution and expecting price to reverse longer term. Of course, we knew that it would have to manipulate some of those liquidity highs before doing so. And this is where it brought a bit of confusion into the markets because we had that breaker structure of the UTAD, which to me could have signified the fact that this was actually a reaccumulation. But the second we had this break of structure, if you remember in last week's video, I said we could then find supply from this region and then look for that bearishness to continue. So it's done exactly that. It's traded back up into this region, distributed, found supply, and then taken a 12% drop. So anybody who managed to get a sell on this pair from that analysis, well done, because the percentage returns from this would have been crazy. So that is going to conclude my section on this Sunday session video. I hope you guys enjoyed the analysis I provided you with. I hope you managed to get involved in some of those investment opportunities that I predicted. But as for now, I'll pass it over to Luke, who's going to do the same, run through some pairs and show you his predictions for the coming trading.
How's it going, guys? Luke here. I hope everyone's had a good weekend and everyone had a really profitable week on the week just gone. Also, I hope you've enjoyed James's analysis this weekend. I think he's shown some really good points and some really good potential for the week coming. Before I jump into my analysis today, as always, I like to go over previous week's results and how we did. So the first thing we're going to go through is XAU USD and the trade that we took on the Monday. So as you can see, we did capitalize on a short position on gold on the Monday afternoon, which was brilliant. This was a case of waiting for the break-in structure that I had drawn out on this yellow line here. Just highlight this more. We had a break from this structure, which then obviously produced us with the next lower low. Obviously it was setting lower lows and lower highs throughout the market, and it did produce us with that. And I actually implemented the Fibonacci retracement indicator with my analysis. I don't always use indicators within my analysis. It's essentially something I use as added confirmation for me that the analysis I've done prior is basically correct. So as I said, we had a break below this yellow line, which was confirmation 1 for me. You know, it was breaking lower down, producing more bearish structure. And then on top of that, we implemented the fib. So it was just a case of getting the Fibonacci, marking my A, so the start of the impulsive wave to the end of the impulsive wave, which was here, and then seeing where it retraced to. Now we got a lovely retracement to the 61.8, which is one of the golden ratios, and then we started to see it setting new lows. So straight away, as soon as we saw it break down and come back up to this point, that was exactly where we entered in on the trade. We had our stop loss just above that previous high where it hit the 61.8, and then we set our take profit where we saw fit. Now, we could have been greedy and open our take profit and left the trade to run, but as part of my trading plan and the way that we trade at LAGFX, we didn't want to be overly greedy, so we left our take profit where it was and still managed to gain a lovely 140 pips on this trade. Then after that, we obviously assessed the markets and wanted to basically place another trade. So what we did was place another short on gold, and as you can see, this one paid off just as well. And this was a case of basically breaking our demand zone here. And then it was a case of just getting a nice entry. At this point, the market was still producing us with clear bearish structure, you know, lower highs and lower lows. So we kind of got, it was a bit of a rough entry, I do admit, but we entered in around this point and then set our stop loss just above these lows here. Now you might be asking why, and the reason for that is just in case price needed to tap back into that point just to clear any remaining liquidity and to manipulate those buyers and sellers. And as you can see, price did ride up, and then we had a lovely move back down. Now, not everyone held for the full duration. Me being one of those people, I didn't hold for the full duration, but I took partials here and there, and I did capitalize on this swing. What I will do, as always, is throw up a screenshot now, just to provide you guys with the evidence of these positions. So now that I have shown you the trades from last week and how we got on there, I'm going to jump into my analysis. Now, the first thing I want to look at is gold, because obviously I love trading gold and I want to capitalize on this pair as much as possible in the coming weeks. But for me, looking at the market, I am still a bit unsure on the direction. Now, I obviously want it to break lower and come down to this demand zone here. But in order for me to be placing any trades on this pair, I will be looking for a break below this point. So if we just mark out this point as an area of interest, I will want price to break below this point, and then I will look to capitalize on a small swing here. But before then, I won't be placing anything, just as I don't really see where the price could be going. So for me, I am biased to a sell. I'm just not seeing that opportunity at the moment. So it'll just be a case of waiting and being patient. Now, moving on to the Euro USD. This is something I've been looking at for a while, and I've just not really seen the right entry to jump in on the shorts while we've had this bearish structure and this bearish move down. But now that price has hit this level of demand and it's produced us with a lovely bullish impulse, I am looking to take advantage of this and potentially place a buy in this coming week. Now, just looking at the 4 hour, obviously we can see that it's broken above these lows here. And I think in order for me to place a trade on this pair, I'll want to see price probably come up to this point, as this was the last high before hitting this demand zone here. So at this point, when price breaks above this, I will then look at placing my long positions. Now, you might be wondering, why don't I just jump on a buy now? Well, that would be impulsive, and I don't really have the evidence to place my longs. Yes, we've had a clear reaction off this demand zone, and we've had a lovely bullish rally. But in order for me to place any positions in the market, I've got to have as much confluence as possible. And I think once price reaches this point, then the confidence will be there in the bulls, and it gives us more data to look at. And therefore we can look and decide what we want to do within the market. So just to summarize on my analysis, I am biased to a sell on XAU USD, but we'll need a break below this point here. And then I am biased to a buy on the Euro US dollar. So there is strength in the US dollar, and I believe that's going to continue. Obviously, we just need price to reach certain points in the market in order for me to then go and place a trade. Now, I know I've not really provided much in terms of opportunities, but that's just my bias. Unfortunately, there's not very much showing in the markets at the moment for myself and the way I like to trade. So it will just be a case of sitting back and waiting, ensuring that my emotions are in play and that I'm being patient, but on top of that, making sure I've got the right confirmation and the right confluence to place the positions that I want to place. Now, the brilliant thing about me and James is that he sees the market a different way than I do. We have some similarities in our strategies, but overall the markets tell us both a different story, which is great, as he is able to capitalize on certain things I won't be able to, and vice versa. So if I'm not necessarily seeing anything in the markets, James might be. Now, this does come to the end of our Sunday sessions video. I hope you've enjoyed watching. If you go back and look at previous Sunday sessions videos, you will see the analysis that we've done prior to the week commencing, and then you'll also see the results that we've produced over time. As every video we put out, we always provide as much evidence as possible. Now, there's a lot of teams, a lot of groups, a lot of mentors and traders out there that say that they have placed these positions and say that they have placed these trades, but then hold no real evidence towards it. Now, that's not the case with LAGFX. Everything that we do, we have evidence for. Everything we do, we provide thorough work behind it, and that shows throughout all of our videos. So like I said, if you are unsure about what we do, literally go and check out our other Sunday session videos. You'll see the analysis that we've provided and the profits they've incurred. Again, I just want to say a massive thank you for watching. And if you are on TikTok, we have started uploading some videos onto there, just showing you guys the basics of how to do things. Little snippet videos. I think they're really good, really educational videos. So yeah, go give us a follow on TikTok. And if you've enjoyed this video, give it a thumbs up, leave us some feedback on how we can improve. And yeah, this has been Luke and James from LAGFX, and we'll see you in the next Sunday session.